Hey everyone, it's Steve from Compassionate Credit Repair, and today I want to shine a light on a topic that doesn't get talked about enough. How someone can absolutely wreck your credit without ever stealing your identity. So when we think of credit disasters, most of us picture identity theft, maybe some shady hacker swiping your details and going on a mad spending spree. But what if I told you that your credit score could be damaged by the people closest to you? People who have no malicious intent, but through mistakes or oversight, can leave you facing a financial mess. So let's dive into some real life scenarios that could leave your credit in ruins and what you can do to protect yourself. So let's start with one of the most common traps: adding someone as an authorized user on your credit card. Now, on the surface, it seems like a fairly harmless gesture. Maybe it's your teenager trying to build credit or a friend who needs temporary financial help. But here's the kicker. Every purchase they make, every payment they miss is tied to your credit. So say you add someone as an authorized user, thinking they'll use the card responsibly, but then they max out the card or they miss a payment. Suddenly, your credit score takes a dive, and you might be looking at a dip of up to 100 points for a single late payment. Now, let's be real. Most people have good intentions, but intentions don't fix bad credit scores. So be cautious when extending this favor to others. We've all been there. Someone close to you asks you to co-sign a loan, they need a car, or maybe they're trying to get approved for a mortgage and you want to help. But here's the thing. Co-signing a loan means you are equally responsible for the debt. And if that person doesn't make timely payments, your credit score suffers alongside theirs. So again, let's take a real world example. You co-sign a car loan for your sibling. At first, everything seems fine, but then they hit some financial troubles and they miss a couple of payments. So guess what? Your credit report shows those late payments too, because you're just as responsible in the eyes of the lender. Now, imagine that scenario happening with a loan worth tens of thousands of dollars. Not only is your credit score in jeopardy, but you might also end up paying for a loan you didn't even benefit from. Another way someone can wreck your credit without committing identity theft is through shared utility accounts. You've probably had roommates at some point, maybe in college or even now. While splitting the rent or utility bills seems like a convenient setup, it can lead to disaster if one person slacks on the payments. If the account is in your name, any missed payments go directly to your credit report, even if you weren't aware of the oversight. Many people don't realize that unpaid utility bills can go to collections. So if your roommate forgets to pay the electricity bill and moves out, that debt can linger on your credit report for years. Suddenly, that one unpaid bill is knocking down your credit score without you even realizing it. Now, let's talk about divorce. A tough enough situation on its own, but even harder when it comes to joint financial accounts. Divorcing spouses often forget to close or separate joint accounts, leaving their financial future linked in ways they didn't anticipate. Even after a divorce is final, if your ex-spouse misses a payment on a credit card or a loan that you both opened together, well, guess what? Your credit will take a hit. So imagine going through the emotional stress of a divorce only to find out later that your ex maxed out a joint credit card or stopped paying a loan, wrecking your score in the process. So it's critical to close all joint accounts or refinance loans to ensure they're in one person's name post-divorce. Medical debt, another silent credit killer. Often, medical expenses get shuffled around or delayed due to insurance complications. And if you're responsible for a family member's care, those bills might never make it to your radar. Unpaid medical bills can be sent to collections, causing a significant drop again in your credit score Before you even know it, there's an issue. A family member may not realize they've left you in a financial bind until it's too late, and that's why it's crucial to monitor medical expenses and communicate with healthcare providers about any outstanding debts that will prevent them from affecting your credit. So how do you protect yourself from these non-identity theft threats to your credit? Well, firstly, monitor your credit reports regularly. Services like annualcreditreport.com offer free credit checks from the major bureaus, so keep an eye out for any unfamiliar accounts or late payments. If something doesn't look right, act quickly. Set up payment alerts, whether it's a joint loan, a shared utility bill, or an authorized user. Always set up alerts for due dates and balances. This way, you can catch a missed payment before it causes any damage. Formalize financial agreements. If you're sharing financial responsibilities with someone, if it's a spouse or a roommate or a friend, make sure you have a clear written agreement on who is responsible for what. It may sound like overkill, but believe me, it can save you from heartache down the road. Also, consider removing authorized users if someone's credit habits are becoming too risky for your peace of mind. It might be time to revoke those authorized user privileges. Now remember, protecting your credit should always come first. So in conclusion, your credit is one of the most valuable assets you have, and it doesn't always take a criminal to mess it up. Sometimes it's the people you trust the most who can unintentionally drag down your score. So do me a favor, stay informed, stay vigilant, and take steps to safeguard your financial future. Thanks for watching this video, my credit warriors. Hope it was helpful, and have a wonderful day.